And welcome back to the Lion Impact Podcast. We have a special guest with us today, Hilario Rucobo. He's a retirement planning specialist, and he's going to tell us a little bit about stocks and investing.
All right, so Hill, tell me, what is a stock for our viewers who just don't know? What's a stock, and how can we use that stock?
Okay, I mean, pretty much a stock, it just means that you're owning a share of a company. So pretty much it's stating that you have ownership in a company and a stake. So by that stock, you're hoping that that share appreciates with the company based off of profit flow, cash flow. You're hoping that the profits will go up in the future. And so it's basically like part ownership of a company by owning, part of a stock.
Right. So we hear this big deal. What is the big deal about stock? You get on TV, you hear it on YouTube, and everybody's talking about investing, getting involved in stock. What's the actual big deal?
I mean, you get to own equity in the company. And so by doing that, you get to, make money in the short term, long run. And so it's a big deal because
just gives you an opportunity to kind of make money through another company.
Yeah, pretty
passive
much.
income, correct?
Passive income, yeah. So if you're trying to diversify your portfolio and you want to make sure, money's coming in, why not own assets? So a stock is like one of those asset classes that I feel like you would have to own and just trade it or hold it for the long term, short term. So it just depends on your strategy.
Okay.
Yeah.
How would you say you should pick a stock? What do you base it on? I mean, I know investing in the stock market is kind of probably not that complicated, but how do you know which one you should go for?
You would want to look in a company that you think is going to disrupt certain sectors. So for example, Airbnb just released an IPO. A lot of motels and hotel companies are scared that their business model that Airbnb has will disrupt that sector. And so that's something that you can invest in the long run in the growth. And so looking for a stock, you may want to look at their balance sheet, see if they're profitable, look at if the stock offers a dividend. So I mean, it's pretty vast. Look at what's their future business models, look at their earnings. So there's certain things you want to look at. Me personally, I like to look at technical analysis, not so much fundamentals, but fundamentals is also important because it can also be a main driver for a stock if it follows its fundamentals.
So in a sense, you're kind of trying to predict their future based upon a company's behavior and how they run their company, if they're doing well and how much money they're making. So you're pretty much almost, I don't want to use the word gambling, but you ever seen movies where people, I can't remember the name of the movie, where people kind of, they'll bet on certain games and they'll go, hey, the QB, he just got a divorce. Right. He's not going to play well.
Shoulder.
Right. Based off of that, I'm picking this team. Is it? Right. Is there anything?
It's sort of like that. So it's what made me get into stocks really hard was doing fantasy football. Oh, okay. So, I mean, you pick a player based on the information the stats, injury history. Right. There's a lot of analytics to all of it. Their weight, height, what system they're in. And so, we don't want to go too much in detail why, how to pick a stock because certain people just don't care about the fundamentals. So it's a pretty broad question. I mean, it's a good question, but that's how I looked into picking my stocks. What does it make sense for me? So I always tell people, find a stock that makes sense to you for the short term, mid term, long term. Some people are not long term traders. So
as a new person coming in, you have $100 that, you've kind of put to the side. You don't know anything about stock and you're thinking, okay, let me get my feet wet here. What would be the position you would ask them to take? It's besides, okay, I've gone on Google and I've did some research on YouTube. After doing some research, now it's time to spend that $100.
Right.
What should I do now? And I only have $100. I don't have 1,000. I don't have $5. I got $100.
Right?
Right. I don't have $28K. I'm just somebody who, first of all, I'm reluctant because I feel like I'm going to lose my money. Right. So how about I start with $100? Let's see what happens here.
That's a great question.
Or are you saying the individual should be like, hey, you know what?
Let me do my homework first.
Should you stack up more money Or can you start with $100 to play with?
I've seen some stuff where people flip $100. Like, honestly, to answer that question is pretty much like, you should ask yourself. So like I would tell that person, what is your goals? Mm-hmm. What is your short-term goals? Mm-hmm. What is your midterm goals? What do you think you're going to make the $100 in 1 year, 2 year, 3 year? So you have to like be realistic with yourselves, because a lot of people tend to think that, oh, it's a quick rich scheme. It's not. It's
something you have to work.
It's not quick, unless the other day this one stock shot up, I think like 2,000% in 1 day. So like if you're like that lucky individual who just got lucky, put like $5,000 and you made, like, do the math, that's what's 2,000 or 20 times, like, you know, so like 20x in your money. So like, but the average stock is not going to do that. So like you're going to have your lottery days. I never had that kind of return in 1 day, whatever. But
guess you wouldn't be talking to us if you did.
No,
if you're somewhere in Dubai hanging out, you know.
But I'm trying to get my friends and people who are interested to understand percentage.
Okay.
And once you understand percent, because if I said I made 50% 1 day, all right, cool. Well, how much money did you have in it? Some people, $5. Well, what's 50? You know, $5, and then $100, 50. And so you have to be realistic. And so, what is your goal? And so, once you gauge that goal and you know how much money you want to make, then you got to find that stock that's volatile. And so it kind of gets itchy because people have different risk tolerance. Some people may not be able to handle the volatility. And so
it's almost like the spirit of gambling. Going back
it's
to
calculated risk, it's not gambling.
Well, okay, educated gambling, right?
I mean, life is gambling. When we gamble, you know, you wake up every day, and every decision you make is a gamble. So, to me, the stock market's like life. It may sound very, like, you know, shallow, but I stock market reminds me a lot, because every choice you make in life, like you're making a calculated risk, believe it or not.
Right.
You know what I'm saying? Everything you do in your life, and that's how I take stocks. Like, you know, I'm trying to make sure I build wealth for my family and for my kids. And, you know, my dad, he's the one, he's got me into it because he's really big in trading. And so like when I saw him doing it, then I was just like, dude, I got it. Because he tried to get me on like a long time ago when I was like 19 and I was in college.
Kind of stubborn at that point, right?
You're just spending stupid money.
And you're kind of waking up to it.
Yeah, now it's just like, But
okay, so now if somebody comes in and they say, all right, man, I think I need a stockbroker. What does a stockbroker do? And can that person actually use a stockbroker? Is it necessary?
Well, I'm not trying to kill any stockbrokers. Like,
no, go ahead. They'll be okay. They'll be fine.
So with the stockbroker, I'm trying to be a stockbroker at my job, whatever. I'm trying to get licensed. So it's very useful if you're not, because investing's not for everybody. Investing is not for everybody. You know what I'm saying? So like, if you still want to have that like mindset of I still want to, you know, make my wealth work for me, my money work for me, I may need to have someone to do it. So like a financial advisor or stockbroker, they're basically the same thing. It's really good for people who are not really so much into like investing, but they want someone to manage their money. And so it's really up to the individual. So a stockbroker is pretty much someone who like place a trade for a client or for the company. They're maybe on their trading desk. So basically it's someone who's a licensed registered individual with the SEC, FINRA, like, so you get your Series 7, your Series 6.5. There's more series licenses for different securities you can trade. So like that's basically what a stockbroker is.
They do it for you pretty much.
Pretty much, yeah. So in the old days, they were very like prominent because like you didn't have computers. You really couldn't do it yourself. So you had to like call them and be like, hey, I need you to buy apples like at $10, blah, blah, blah. And they'll like.
So technology just killed them pretty much.
It's killing them slowly.
Do it yourself.
Fintech is killing it, yeah. I mean, stockbroker would be around forever, I feel like. But like, I mean, when everything's becoming automated and AI, I don't know. Like, we may not.
But then again, a lot of people don't want to go ahead and do all that research and studying stocks and stuff like that. And that's where stockbrokers come in, correct?
Right. And then you have to pay that commission, broker fee. And so, I mean, it just depends.
Small price to pay for convenience, right?
Right.
Simplicity.
Exactly. And that's what I was just going to bring it to. So the advantage to a TD Ameritrade and the other companies alike is that there's always someone you can kind of just call and say, hey, listen, I need this done. And as far as explaining things to you, I guess with that customer service, that's always there for you, where that's a disadvantage when you're doing it through an app. Really no one to call And if you just lose, you just kind of lose.
Out of luck right there, huh?
Right.
Yeah. And yeah, I always tell people, like, you can always pick which one to pick, but I always tell people, like, if you're not trying to, like, trade hardcore, or if you are trying to trade hardcore, me personally, I'll stay away from Robinhood.
Okay.
Yeah, but I mean, I'm nothing against it.
No, of course
nothing
not.
against Robinhood, for real.
Okay, so now you got Robinhood. So now our viewers know, stay the heck away from Robinhood. How do you feel about then the Cash App? And I think you mentioned
Acorn.
Mm-hmm. Now, are they very similar in their behavior?
Similar, yeah, very similar. So I'm glad you asked that too, because I was going to tie it in. If you're not a hardcore trader, if you're not, if you're one of those people where you just want to put your money, you don't really want to look at it, and then Acorns, Cash App. I think Cash App did it like last year or 2 years ago. I use Cash App too sometimes to buy stocks. But I got more serious. I just started using my employer's broker. But yeah, I mean, that's pretty much in that ballpark. The only difference is some of those apps like Robinhood and Cash App and Acorns, it's good for passively investing. But if you're trying to find a specific stock, you may not find it. Some of those, like sometimes it may not be listed. Like they don't offer.
They don't offer all those.
Like a lot of the penny
varieties.
stocks, exactly. So with Fidelity, like Charles Schwab, if you want to trade pennies, it's called OTC, over the counter market, where it's not like traded like in the exchange. So it's over the counter and it's traded electronically. Those are the ones where it's risky. So that kind of ties in with the penny stocks. So it's called OTC, and then you have like your New York Stock Exchange, and
Okay, so now and I've noticed that because I've played around with the WhatsApp. WhatsApp. The Cash App. I apologize. The Cash App app as far as, stock and all that. And I just wanted to kind of get my feet wet just to, not knowing anything about this.
Right.
And I'm hearing a lot about it. And no, I don't want to be, a massive trader. Not at this point. At this point, I just want to get involved and learn and make some mistakes. So I would take, $5 here, $10 there, and just to see what it does.
Nothing wrong with it, yeah.
Right. So then I would see what it does. And then after putting in $5, and then I would see it kind of drop the first few days. And then I'm like, and then it would increase. I think about the first stock I ever bought was with Apple. And that's how I knew about the split thing. Because they sent me a message and I was like, what is this? Whereas I guess that's the disadvantage where if I was with a bigger company, they could take their sweet time explaining it to me. Whereas with Cash App, I kind of had to read and understand it to the best of my knowledge, which I guess is good because we do have YouTube. You could always go and find out anything. But to your point, I see a good disadvantage or an unfortunate disadvantage is I know I was looking up, I can't remember what it was, but I wanted to invest in something that someone said was a good idea. And when I went on Cash App to look for it, it wasn't listed. So you are exactly right.
It's crazy.
I know that from experience.
It's very, slowly they are releasing, like Robinhood has way more options than like Cash App, because Cash App is still kind of new. So like they're slowly, but they mainly focus like on the mainstream stocks like Johnson & Johnson, Ford, Tesla. But like some of these stocks that have been coming up, like I don't know, I don't really use Cash App. So yeah, it sucks if you if you miss it. It's just, I just feel bad because I was just like, you missed the opportunity. Like, oh my gosh, I only have Cash App. You need to take the time to like open, because you're like, when you get started with the apps, like with Robinhood and Cash App and all that stuff, like it's easy to sign up. Boom, you're done. Whatever. But with like Fidelity and all these other companies, like they ask, like it's like they're the FBI. It's like because they ask all these background questions, like does your family sit on the board with the SEC or and like all those kind of questions. And so it's kind of tedious. It kind of
make sure you're not doing no inside trading.
Yeah, you have to do an application. They have to approve. They ask for your income. Robinhood, dude, everyone can make it with it via Cash App. It's quick. Like, no questions asked.
So essentially, our viewers who are new to the game, because I know there's two sets of people that are probably going to be watching this. This is your set of people that are much like yourself, that are pros, and then
pros, more seasoned than me,
right? And then, but the majority of us, including myself, you too, Esteban, we're just trying to get our feet wet. And I will say, I'm happy I did start to try it. Because even though I was only doing $10 here, $20 here, just kind of throwing my money in there. It feels good to wake up in the morning and check Cash App,
Greatest feeling,
right? Mm-hmm. And see that I've made $2. No, yeah, I know it's just $2.
Profit's profit,
right?
Exactly. I always tell people profit's profit, right? It's all relative.
Yeah,
you know,
because it was $2 you didn't have.
Yeah,
yeah. Exactly.
I mean, and really, it's getting in my head because I know one day I was looking at it and I started walking around like I was the boss. I felt like I was Diddy or something. Man. You only made $2, man. Calm down. So, but it was just a really empowering feeling to know that. Okay, I think I'm getting involved here. Yeah, okay, it's just a few dollars, but I think everybody has to start from somewhere. So he's absolutely right, and I would definitely ask viewers who are beginners, such as I was, to start with $5, $10, and then
work their way up.
Right, and as you educate yourself, then go into the bigger TD Ameritrade